On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Hello, welcome back. We're at Precious Metals Summit and I'm with Ryan King, the Executive Vice President of Capital Markets at Equinox Gold. Ryan, good to be with you.
Well, it's always good to be here, Peter. Thank you for having Equinox back on your show.
Oh, mate, anytime. Look, obviously this is a new Equinox in a sense. How's the merger? How's everything been since the merger?
No, you're right. It is a new Equinox. It's a very interesting time, very exciting time for the business. We've got, how are things going? Well, look, we've had some management changes.
Yep.
And so Darren Hall is now the new Chief Executive Officer. And there's been some other changes at the executive level. But look, I think that we're progressing on. There, in any kind of merger like this, of this size, you've got cultures coming together and it can be challenging. But I think we're making some really good progress as we advance this. I think Darren is setting up a really solid structure, a structure for success. Very clear on roles, responsibilities, and accountabilities, which is very important in any business to be effective. And so, no, I think it's coming along well. When we look at the asset portfolio, we've been very fortunate with, it is a new Equinox because we have added another high quality, high margin Canadian asset at the beginning of its life.
Yeah.
So Greenstone in Northern Ontario has been ramping up for a while. It continues to see that ramp up, but we're seeing good progress. Q2 into Q3, I think we'll see more ore tons, more material movement in the mine. We'll see more throughput through the plant, so it is making some good progress. And then just recently, we announced from the Valentine gold mine, central region of Newfoundland and Labrador, that first ore is now going through the plant. So it's an interesting time because we have been in a capital intensive investment phase over the last number of years, and we're now transitioning, or we've got this inflection point happening where we will now be in a cash harvesting and a deleveraging phase. So in my view, a very exciting time for the business, and equally as well within the macro landscape, we're seeing gold hitting all-time highs.
Yeah, this is going to help with, obviously, as you ramp up, as you repay the debt, so the payback periods, I'm assuming, are looking shorter and shorter as the gold price goes up. Obviously, we were talking to Ross Beatty on the channel, I think maybe 3-4 months ago. Sort of, he's very much got in his mindset that dividends will be on the cards at some point as well. So, but I guess even before we get there, let's talk about the project that you came from. Let's talk about Valentine. Seems like things are actually going pretty well. What's the current state of play? When are we expecting sort of full-scale commercial production?
Well, in any type of operation like this, in a plant of this size, it will take some time to, call it the gremlins within the plant. As you go through construction, you might have missed something or that. You want to make sure all the pumps and piping is working, etc. And but fortunately, Valentine was set up a year ago, so well through construction, but with an operating team. So started to hire the operating team to dovetail with the construction team, and an operating team that comes with quite a lot of commissioning experience.
Yep.
Jason Sear is leading up the operations there. Jason has a tremendous amount of experience, and what we've seen so far is doing a tremendous job. First ore was planned for Q3. First ore about 10 days ago started to go through the plant, and all is running really well. I mean, there's always going to be daily things that come up, but because of the team is recognizing those challenges that could come up and being able to react to those quickly to rectify those changes, we're in a better position today because of that team, and therefore likely leading to a more effective, likely a more efficient ramp up. We've publicly said that we would be likely at nameplate capacity, which would be about an annual run rate of 2.5 million tons through the plant yearly by the end of Q1 of 2026, which would set up for, call it, 150 to 175,000 ounces in 2026 out of the Valentine asset. So really ramping up and turning up two cornerstone long life assets in Canada.
So just remind me of the numbers. So obviously coming out of Greenstone and Valentine, I think is the right number around 450,000 ounces per annum moving forward?
On a combined basis,
Yeah.
yeah, call it 400 to 500. You know, we'll have swings and roundabouts on an annual basis. I think life of mine average at Greenstone is somewhere around the 330,000 ounce average. Darren has kind of been helping people understand as we go through the ramp up how that's looking, and we're kind of at this point in time saying, look, at this point in time, we would expect somewhere between 275 and 325,000 ounces. And again, you know, based on where you are in the mine and grade profiles, et cetera, how that's working, it'll likely be around that range. At least based on what we're seeing at this moment. You know, we're starting to understand the resource model better, the you know, how it's reacting in the plant better. So we'll have a better understanding, and we'll likely come out with an update, maybe a technical update, a technical report update, the first half of 2026 timeframe. But then you look at a Valentine, and based on a technical report, the first 12 years of a 14-year reserve life would be about 195, 200,000 ounces a year on that reserve, that 2.7 million ounce reserve base. The total global M&I and inferred resource is about 5 million ounces.
Nice.
And I can't recall exactly, but I believe that the reserves were calculated around $1,600 gold, resources around $1,700 gold. So there could be opportunities where you might be able to extend that, push the pit walls out a bit, look at the economics of those opportunities. But yeah, call it, you know, 300 from Greenstone, call it 200 roughly from Valentine. You know, you're in that 500,000 ounce a year production profile, again, from new long life assets. And I think both regions will be investing capital in exploration. So we've seen the benefits of that already. At Valentine last year, we announced some excellent new discovery drill results. 90 meters of 2 grams, 172 meters of 2.4 grams.
Yeah.
This is a kilometer outside of the known resources. So that tells you that there could be some tremendous exploration upside potential. When you look at this big regional belt that goes through the property, it's about a 35 kilometer long shear or fault that goes through the property. And currently, most of the exploration has happened over about a 6 kilometer trend. So we'll see, but it could be an exciting endeavor in front of us to see what that could look like from a growth, from a longevity perspective. And remember, Valentine is a greenfield site.
Yeah.
So this is brand new and exciting, and I think there'll be more discoveries along the way.
What's the company strategy there? Because obviously, with some producers, it doesn't always make sense, especially when you've got a long mine life ahead of you, to invest in the exploration side, because you sometimes don't see the value reflected. Is that a concern, or are you committed to doing some more exploration on the belt?
We're absolutely committed, and I would say as a whole, not just at Valentine or just at Greenstone, we'll look at the whole portfolio.
Yeah.
I would anticipate, and Darren's said this also publicly, that we'll spend about $100 an ounce on exploration. So what is that? That's roughly $100 million a year if we're producing 1 million ounces a year.
Yeah.
And this is exciting for myself and others as shareholders, because what has had the most positive impact on resource company share price performance, it's finding new or expanding resources, especially economic resources. Yeah. So I believe that's an incredible high value, high return use of cash flow being generated from your operations. And so we will definitely be investing. And I think that that's something that an Equinox shareholder can look forward to in perpetuity, that we will continue to invest in exploration, and just because it has the opportunity or the potential to have such returns for shareholders.
Okay, and now that you're obviously in the commissioning phase for Valentine and you're in the ramp-up phase for Greenstone, are you anticipating that there will be no more sort of big capex expenditure on the way? The real focus now is actually on cash generation.
Correct. Yeah. The significant capital intensive investment period for now is behind us.
It's done. Okay.
Yeah, it is behind us. And so the focus now is effectively and efficiently optimizing and operating these assets, delivering the ounces, generating the operating cash flow, generating the free cash flow, delevering the balance sheet. You know, very hypothetically, but you know, this is not guidance, but on a high level, you think about when Valentine gets into production at a full run rate, you're looking at 900 to 1.1 million ounces of annual gold production. I don't know where the cost structure is, but let's say it's somewhere around $2,000 an ounce. Now I'm being a little bit conservative, but you know, that would generate roughly 1.6 billion in operating cash flow, pre-tax operating cash flow.
Yeah.
Providing an opportunity to delever the balance sheet very effectively.
Oh yeah. Yeah.
And then, as you rightly said, you know, you had Ross on before talking about potentially dividends in the future and returning capital to shareholders. And so our focus is absolutely that, is to delever, return capital to shareholders, and then look at ways to rationalize or optimize our portfolio. What's great about Equinox today is the company, the business does not need to go out and look for additional growth.
Yeah. Yeah.
We
You've
have
already done that.
organic growth in
Yeah.
the portfolio in the pipeline. So we're in a very strong position. We've got Castle Mountain in California going through the phase 1 permitting process. And we're working through options and different aspects of the Los Filos asset in Mexico. So I believe that we're set up very, very well to generate significant amount of cash to self-finance and pay down debt and possibly return capital to shareholders.
So when do we get to this magical million ounce per year figure, do you think?
Well, let's look at this year, right? I mean, this year, our guidance on a combined basis was 785,000 ounces to 915,000
Yeah,
ounces,
so you're almost there. Yeah.
which doesn't include any production from Valentine. So you add on another 200,000 ounces and there you go, right? So, you know, and again, this year in 2026, we likely not see a full annualized
Yep.
nameplate capacity because we're still ramping into Q1. But, you know, you call it 150,000 ounces and you're probably in that
You're
850 to 1050, call it 1.1 million ounces in 2026.
Wow.
So
Okay.
we're there now. The portfolio has been assembled, and it's now taking that portfolio that Ross and Greg and the folks at Equinox and Calibre have assembled over the years and delivering on those assets.
I wouldn't mind going back to the exploration strategies for a minute. Obviously, you're on the Cape Ray sort of Valentine shear zone, aren't you, in Newfoundland? And you're really the first one to find a deposit of scale for 5 million ounce deposit. You've also picked up ground sort of in between, I think, El Dorado and yourselves, and then there's another patch of land on that belt which I think you guys own. Are you looking at the wider sort of district opportunity within Newfoundland, or is it really more of a focus around the mine at the moment?
Well, we're always going to look for opportunities where the geological team sees there could be additional prospectivity, especially if nobody's there. It doesn't cost a huge amount of capital at all to pick up new licenses. And it always, you know, costs more if all of a sudden some other junior has picked it up and advanced something to be a point in time where it would make sense for us to do something. So they're always trying to think ahead proactively. But given what we see from a geochemistry perspective, a geophysical perspective, this is an orogenic gold deposit.
Yeah.
And I think the number is something like over 70% of the world's gold has come from orogenic gold deposits. And this one particularly is underexplored. I don't know exactly, but I think the number is like 90% of drilling over the last 10 years has been to increase confidence in the resources to get to a reserve category. So there hasn't been the capital to invest in the multiple shear structures that are on the property and the geological potential. And I think the stat is something like, once an orogenic gold deposit finds 5 million ounces, there's something like a greater than 50% chance you will find another 5 million ounces.
Is that right?
On the property, statistically speaking. And I can't say exactly where I've read that, but yeah, statistically speaking, orogenic gold deposits are the type of deposit you want to be in. We're in an underexplored greenfields district and a very favorable jurisdiction. Obviously, Canada and Newfoundland, fantastic places to be with great infrastructure.
So in my head, that actually makes sense now, why you're seeing El Dorado Gold have come since you found Valentine. You've seen B2 Gold invest in Omega. You're seeing some M&A going on the belt. I think Newfound Gold just obviously took the maritime stuff.
Right.
There's a lot going on that belt now, and really that's very similar in a way to what's going on in Finland when Rupert Resources found the Ikkari deposit.
Sure.
It's-
Yeah.
You get these guys gravitate towards.
Yeah.
So in terms of your actual exploration mindset, what sort of scale can we be looking at? Because like you said, this is a huge belt. You're talking hundreds of kilometers in terms of the overall belt. But in terms of the licenses you have, how much attention could we be maybe potentially seeing from you guys?
Well, look, I might be getting a little ahead of my skis here, but once as construction completely finalizes here, and our camp space frees up, we have more availability. I would expect that we will see a gradual increase in exploration, in geologists, in people working, the landscape in terms of geochemistry, in terms of geophysics. Obviously, there's a lot of different tools being used. I know the group on the ground there is also using Verify from an artificial intelligence perspective to pull it all together and see if we can have new tools or new targets. So, I mean, a lot of it is going to be based on results, but I wouldn't be shocked in 2026, again, as we ramp up, ensuring that all of the operations are running smoothly, that we see somewhere between 3 and maybe 8 rigs potentially working on this property. Okay. Again, because we see great value to increase share price performance based on resource expansion, based on discoveries, and we see Valentine as a fantastic new orogenic gold deposit that has great upside potential.
Yeah, it's something I've always, because I've been looking at Newfoundland for a few years now, and it's always something that I've heard from other geos who have also know the area, that there's in their view, that there is a hell of a lot more to go and find in that belt. And obviously it sounds like you've got the same perspective. Just changing track back onto, I guess, the value proposition of Equinox. Obviously now you've done the merger and the dust is settling. How are you telling investors, how are you talking to investors, say, at this show about how they should be appropriately looking at where the value is in Equinox and how to really, I guess, work out what a valuation should look like?
Yeah, I mean, that's a multi-pronged question, but I would say that, look, I mean, underlying all of this, you're not going to be looking at Equinox if you bearish on gold.
Yeah.
Right? And look, and I say that because, look, the gold price has had an incredible run. Since 2022, physical gold price is up 100%. And so, that's been a good return for investors that go down that path. Equities have done relatively well. Equinox has lagged the group, partly because of that capital intensive phase that we've gone through, and partly because there had been times where we had missed expectations, missed the delivery expectations to be able to self-fund some of that growth. And we were in a penalty box for a little period of time, right? And we recognize that, so we're putting the human capital in place to be able to focus there and deliver on those expectations. So if we look back from 22 to year-to-date present in 2025, Equinox has returned 58%. Share price performance is about 58%, 57%, whereas the peer group average is somewhere around 250% returns. So as we deliver and unlock value from these Canadian assets, I believe our discount rates will go down because now we've enhanced the portfolio so that over 53% of our net asset value is now coming out of Canada, 65% coming out of North America.
Yeah.
So I think that's going to start shifting the mindset of the valuation, and people are recognizing that. In the short period of time here, the share price has done relatively well. But again, I include that in that 58% versus the peer group that's averaged 200 to 300% return. So is there opportunity? I believe so. Some of it will continue to come as we give more updates on the ramp up of Greenstone. Definitely. But also as we deliver Valentine. Obviously, anytime you're turning up a new plant, there's always questions. How's it going? What's happening? And so far, knock on wood, it's been relatively smooth. Are we going to have hurdles and challenges along the way? Absolutely, we will. But we've got a great team in place to be able to react and then continue to deliver on those expectations. So no, I mean it's enhancing the portfolio. It is looking at ways to unlock more value by possibly rationalizing things in the portfolio. Like just recently, we announced a divestiture of a smaller Nevada asset portfolio. So a development stage asset in Gold Rock, which is about 15 miles away from our Pan operation. So we would anticipate to close that either maybe probably early Q4 of this year, which puts about 115 million, almost 100 million, $90 million of cash against some of the debt that we have in the portfolio. So, looking at ways to rapidly de-lever and possibly could come with additional rationalization of the portfolio. So let's see how that goes.
All right, amazing. Ryan, thank you for your time.
Excellent. Thanks very much, Peter.
Thank you.